I read the news so that you don't have to. Another day, another African nation being sued. So the headline says, bondholders prepare to sue Ethiopia over $1 billion debt default. Alas, what is happening to the second most populous nation in Africa? Okay, quickly. So a couple of years ago, 2023, Tigray civil war in Ethiopia, they default on a $1 billion euro bond. They clearly had other things on their mind. So since then, Ethiopia has been trying to restructure their debt through the G20's common framework. That's a system that gets all of the big creditors together, like China and, bond investors, to agree a fair deal. Ethiopia have already secured deals on $8 billion of official loans, and they've also got $3.5 billion in debt relief, mainly from governments and state lenders. So then last month, they struck a separate deal with private bondholders. In this new deal, they'd swap out the old bond for the new bond, and the payments would actually be linked to Ethiopia's export performance. So bondholders get more money only if Ethiopia does better than IMF forecasts. There were also caps and conditions to limit the upside. You'd think everyone was happy. Everyone was not happy. Official creditors, led by China and France, did not respect the game. You know that saying? Never count your homie's pockets thinking you deserve it? Well, they did. And they blocked that deal. They said, nah, bondholders are getting too good of a deal. And also, because Ethiopia's economic outlook looks favourable, bondholders shouldn't benefit from the upside. So as a result of this, hedge funds such as VR Capital and Farallon Capital Management are suing Ethiopia in the English courts in order to enforce payment. So why everybody mad? Okay, so the bondholders are furious because they said they accepted a deal which was risk sharing, and they also say that the official creditors already got generous treatment via earlier restructurings. They also said China and France seem to be changing the rules late in the game. The official creditors, a little bit red-eye, they said no, if bondholders get paid more when exports recover, they may end up doing better than governments, which undermines comparability of treatment. They see this could mean less fiscal space for Ethiopia, as well as more pressure on public services. So, for example, campaigners like Debt Relief are saying that this deal could shift too much risk onto ordinary Ethiopian citizens. In short, they're like, private investors shouldn't profit from recovery before schools and hospitals and basic services. And at the moment, Ethiopia's bond is trading at 105 cents on the dollar. That means the money is there. Markets are already pricing in near full repayment, despite the recent default and the ongoing poverty and restructuring needs. And that's also why bondholders feel justified, because they're saying, well, the market is telling them the money is there. There's a lot more to this, but ultimately, this isn't even really about Ethiopia. It's about whether there's any workable global system for really fixing sovereign debt issues.